Saturday, January 15th. It's going to be a good day, right? Let's have a positive attitude. It's going to be a good day. Hope you all are having fun. Before we get into the daily financial news, let me just congratulate two people who did the work. Let me know about it. We're sending out some cards. This week, by the way, I think it's official. I think we're over 400, folks. We're on our way to 500. We're on our way to giving money to a charity. We're on the way for me having purple hair and some other goodies. I am so looking forward to that. But first, let's congratulate Greg and Derek for getting their deals done. Your cards will go out in the mail. Folks, if you don't know what this is, I am personally trying to figure out what the heck is the value, the impact of doing daily content on YouTube. What is the impact of writing a book, of building a course, of following around one rental at a time? If I've helped you in any way and you close on a rental property, I would love to know about it. I would love to send one of you these cards. If you follow me on YouTube, you count. You read my book, you count. You're one of the students, you count. I am a very easy grader. This is what we will be doing as we amass helping 1 million folks. So good morning, good morning, good morning. Thank you for watching. Don't forget to like, subscribe, comment, and share this platform, this videos, the three amigos, my 8 millionaires. We are doing this for you. So let's get the party started. I don't know if you saw the 10-year note Friday. A lot of you probably do not watch it as much as me, but I got the following text from one of my mortgage brokers, somebody I communicate with regularly. I'm going to read it to you, so I'm going to read it here. I actually printed it out because it's on my phone, so I have to print it out because I'm talking to you here. Well, I give you permission to cry. Today just plain sucked. Yesterday's strong finish showed a bit of hope that we could be improving, but today has crushed those hopes in the worst way. Markets are starting to price in more Fed rate increases, and it looks like we are going to see rates move higher, and we could even push into the fours. What have I been talking about? What a brutal day. Monday is a holiday. Bonds closed, so we have to see what next week brings. But it now looks like it will be pretty bad. Try to have a good weekend. That is what I got from a mortgage broker. We've texted back and forth a few more times. Basically, his feeling is, basically one of warning. However, what I want to tell you and what I text him back, for this one rental at a time channel, for what I talk about, I'm excited. Why? One, it's been what I've been calling for. It's been what I've been calling for recently. So it makes me feel good that the 20, the 25 years of daily activity is paying off. And I told you this was coming. Lots of you didn't agree. Lots of you still say the Fed can't do this. The Fed can't do that. That's your opinion. But again, why is this important? Because not only do I tell you what I think is coming, I take action. That is the difference between me and a lot of channels. First, one rental at a time has 8 experts that don't always agree. And second, when I find something and I think something is going one direction, I take action. What did I do? Well, I went and got 30-year money on office buildings and apartments because I saw this coming. You don't borrow money when the market is painful. You borrow money early so you have dry powder, because when you need it, the banks won't be there. That is a lesson I learned big time in 2010. When the deals are out there, no money to be had. So again, what I told this mortgage broker is, hey, your refi business is going to be in trouble, which you've heard me talk about, but I actually think investors could step up. So again, I thought that was a very interesting text, and clearly my buddy was having a bad day. But hopefully I put a smile on his face. So as we get into the daily financial news, it is quickly becoming obvious that my call on a weak Q1 was once again right. What do we have so far in Q1 2022? We have consumers retreating. Retail sales are weakening. Traffic is down. I told you this was coming, and it's happening. Retail sales tumbled in the month of December. People bought early, but people are nervous. They're pulling back. This is what we are seeing. Factory orders down. And then finally, something we haven't talked about this week, consumer sentiment down. So again, these are things that are really becoming a problem. The consumer sentiment was the lowest recorded in the last, second lowest in the last decade, which is pretty interesting. This Q1 is going to be pretty weak. This is what I see coming. And again, I've been calling that for a month now. We're in it. Well, let's see what happens. I don't know if you heard this, but New York eviction ban ends today. I don't know if you are a landlord in New York or perhaps a tenant, but yes, the eviction ban ends in New York today. It's estimated that about 590,000 folks in New York are behind. All these estimates have been wildly off in the past, but yes, that is where we are at. 2022 is starting to feel like the base case, which is, again, base case is kind of like most likely, is stagflation. Stagflation, if you don't know what that is an inflationary environment with no growth. It's kind of the base case. And actually, again, I've been calling for a recession. I've been hesitant to call a recession because I don't know if it's late 2022 or early 2023, but it is out there. I believe, unlike a lot of folks, that Jerome Powell is going to be more Paul Volcker-like rate increase. I still stand by the fact that I think his first rate move is a 0.5 point. Nobody else is calling for that, I don't think. I've been calling for that for 4 months now, so we'll see how I do. Jamie Dimon. Jamie Dimon's been out in the media here recently. We've talked about him a couple of times. He actually sees 7 rate increases. 7 rate increases would mean the Fed raises rates. I think there's only 7 meetings in the year. I have to go back and check the calendar. There might be 8. Let's say there's 8. There's one in January because it's next week or the week after next. So I think there's only 7 others. So basically, Jamie Dimon is calling for a rate increase every meeting. I need to check that. I don't know if there's 7 or 8 for the year, but it's easy enough to look up. But yeah, Jamie Dimon is calling for 7 rate increases, which would be very kind of Greenspan-Bernanke-like. You know, every time we meet, we raise it a quarter. I again think that Jerome Powell needs to shock the system. He needs to surprise the system. Stop jabbing, you're not jab, 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 right hook. He needs to send a haymaker out of the gate. He needs to surprise the market. He needs to cause a reaction. Otherwise, the market will anticipate it, and it will be not as effective. I don't know if you saw this, but Cathie Wood is having a rough year already, and the year's only 10 trading days old, maybe 9 trading days old. Looks like ARK-K is down 15.2%. Again, this is something that I called 9 months ago where she was still riding high. And basically, it's no fault of Cathie Wood. It's just historically, statistically unlikely that somebody who has been a rock star for 2 years is a rock star for a 3rd year. That's what I called. You can go back and watch the video. It's just historically unlikely. And then the fact that Cathie Wood has not changed her opinion, her strategy, she's still talking about this 5-year time horizon. It might work for her, but if you are in ARK-K and staring at these losses, most of you won't hold for 5 years. Cathie Wood has a 5-year marketing spiel. It's genius. She doesn't have any year-to-year pressure. It's freaking awesome. But again, that doesn't mean that you aren't feeling pain and you will not sell at the bottom. But again, yeah, 15.2% down in 2 weeks on top of a week end to the year. That's pretty rough. There was an article on Market Watch. Market Watch is interesting. Market Watch put out an article about interest rate increase cycles and interest rate cut cycles. So basically from the first rate increase to the last, from the first cut to the last. It was really an interesting read and not what you would think. Would it shock you to understand that over the last 5 periods of interest rate rise, right, from the first rate to the last rate rise, that the average stock market is up? The Dow is up 55%. The S&P is up 62.9%, and the NASDAQ is up 102.7. That is not what I would have expected. And again, there are 5 periods. The only down year happens to be the dot-com era, 99 to 2001. The Dow is down roughly 2%, S&P down 5, and the NASDAQ down 13. So interesting. Yeah, 5 periods of interest rate increases, first to last. 4 of the 5 were up cycles. Something to think about. Obviously, the one down again being 99. This kind of feels like 99, but again, just interesting data that I would not have thought of. Good old California. I can't believe this, folks, but California, one of the highest tax states, wants to increase our state taxes again. They have a proposal called ACA 11 that will raise $163 billion in new taxes in 1 year. Yes, there is some tax the rich, sure, but there's a bunch of payroll taxes. There's a bunch of business taxes. Again, the state government in California is out of their damn mind. Are they not seeing businesses leave? Are they not seeing income earners leave? And again, I told you this would happen a year ago. When it becomes offensive, the rich will leave. The California government spending will have already happened, and they will come and tax the middle class. California government, another $163 billion in 1 year is going to crush the middle class, is going to open the door, and people are going to continue to leave. Folks, we already collect enough taxes here. Stop your freaking spending. What the hell are you doing, pretty boy Gavin Newsom? Man, I couldn't believe that. I thought it was fake news. It was such a dumb idea. But nope, California wants to tax some more. And again, double taxes. Proposal, you can look it up, ACA 11. It made me mad. Netflix raising prices. Don't know if you heard, raising prices in the US and Canada, a la inflation. And of course, Wall Street likes higher consumer prices. So get ready to send monthly fees to more monthly fees to Netflix. Jamie Dimon again, wage inflation is everywhere. Again, I told you this was coming. Man, it feels right. It feels good to be right. A lot of people were saying, Michael, you don't understand. Wage inflation is only for minimum wage and blah, blah, blah. And I said, yeah, that's what you're seeing. You're reading some fake news. Wage inflation is the entire stack. It's just easiest to see at the low level. It is if it's impacting investment bankers and asset managers, you know it's impacting everyone, right? It's on you, the employee, to either get a raise, or if you really want to make more money, change jobs. I was a hiring manager for 15 or 16 years. Again, it's just the way it is. Your current employer will not give you the big bump. They will bend over backwards to give you 3 to 5%, which in this environment, not even inflation. You want the big 20% bump? Get your resume ready. Go to a competitor. Go to someone else. It's just the way it works. I'm sorry. Motley Fool came out with another article. Motley Fool says owning rental property is one of the best moves for retirement. I couldn't agree more. You know my story. I always talk about trying to get to 4, not 100, not 1,000, not any stupid number. This many. That's 1, 2, 3, 4. That will change your financial future. It will improve your retirement. You will have so many more options. You could almost say every day is Saturday. I like that saying. Every day is Saturday. Last, we'll talk about the week ahead. We'll talk about the economic indicators first, and then we'll talk about the earnings that I'm looking at. The economic indicators, Tuesday, we got the Home Builders Index, which will be interesting. Are they building more, slowing down labor, inflation? What's going on? Wednesday, the Philly Fed Index, one of those readings before their meeting. We'll see if they're still reporting business activity, consumers, things of that nature. Thursday, of course, is jobless claims, but also we'll get existing home sales. I don't know. I expect that to be down, but down because of inventory. So we shall see. And then finally, leading economic indicators, which will be very, very interesting. Monday, or with the week ahead earnings. Again, Monday's a holiday. Tuesday, we got Goldman Sachs, PNC Financial, and JP Hunt Transportation. Wednesday, Morgan Stanley, B of A, State Street, and Procter and Gamble. Thursday, Netflix, United, and American Airlines. Those are airlines. And then Friday, we got Huntington Bank shares. So a big, exciting week ahead. I look forward to it. Remember, at 8 a.m. or in about 15 minutes or so, I will be doing a live stream from 8 to 9 a.m. Pacific. And then if you're one of my students at 9 a.m., we jump into a very private, small group in our Facebook group. So look forward to seeing you there. Bring your questions. Let's have some fun. Again, every day is Saturday, especially on Saturday. Like, subscribe, comment, and share. There's no way I can help 1 million people without you. Share the videos that you like on this channel. I would greatly appreciate it. And we'll talk to you in the live stream here shortly. Bye-bye.